Okay, guys, welcome to Chartorium, and today we'll be talking about time frame, the divisions of time frame, trading psychology rules, and types of traders. That's what we'll be talking about today. So in our last video, we already understand what we mean by the introductory aspect to trading, the types of orders, analytical methodologies, um, the foundational terminologies, the tools for synthetic trading. We've done all that. So today we will be moving on to what we mean by time frame, time frame. So getting to the definition, time frame refers to the period that each candlestick, or let me just say, time frame refers to the period that each candlestick. What they mean by candlestick is all this red and green you see here. All this red and green, that's what they mean by candlestick. All these lines, all these candles, all this red, green, red, green, red, green, red, green, red, seen on the chart. So that is what candlestick is. Then the candlestick, the bar or a tick. This candlestick has a lot of there are so many types of candlestick. So depending on the one you like, this is one here, you see. I think this is a bar. So there are a lot of them like that, you see. This is one again. So depending on the kind of trader you are, but this is the one I make use of. Are you getting me? So this is the candlestick I make use of. I don't make use of bar, I don't make use of tick. I make use of candlestick itself. So now, actually this is recorded on phone because I want people to believe that you can do big things from small places. You don't need a system before you can actually become a trader. You can trade from phone, you can trade from tablet, you can trade from anything that allows you to operate your trading platform. So that's how it is. And now, so a candlestick refers to the period that each candlestick bar or tick represent on a trading chart. So this is a trading chart, just like I explained earlier or in the former video. This is a trading chart. So now the candlestick, the time frame defines how price data is visualized and determines the scope of market analysis. So now this red and green candle you are seeing here determines how I view this chart. Are you seeing? So this red and green you're seeing here defines price data. That giving me the price data that, okay, at a particular time this market went up, it came down, it went up, it came down, it went up, it came down. Are we together here? So, and visualize, it defines our price data, that is the going up and the coming down of this chart, is visualized and determines the scope of the market analysis. So it is this time frame that will let me know how I am going to analyze my chart. But for now, we are not going into analysis. We are just doing what time frame actually is. So now the divisions of time frame. Divisions of time frame. The divisions of time frame. So time frames are divided into three major groups. They are into three major groups. We have the higher time frame. Oh, sorry, let me pick it from the list. We have the lower time frame, we have the intermediate time frame, and we have the higher time frame. So those are the three groups of time frame we have, like the three types of time frame. When you hear anything like time frame, we have the lower, we have the intermediate, and we have the higher time frame. So now coming to the lower time frame, they represent shorter period of market activity. That is a fast period, a fast section of the market, not the deep part of the market, just a scalping, like, I don't know how to explain it, like the surface part of the market. So that is what the lower time frame represents. They represent a shorter period, like you are not taking too long on the chart. You are just there for you are just there for the time. So now the lower time frame are the M1, the M5, and the M15. What this means is the M1 means the 1 minute chart. That is this. This is the M1. You see it's loading. So this is the M1. The M1 is still loading. You can see our M1. Then I'm on a trade here and I took this as sniper. It is due to how I analyze the market as well. You can see this trade is, It's going, and it's heading to TP already. So we have the M1, the M5, and the M15 chart. So yeah, they are used for scalping. Are you getting me? The M1, the M5, and the M15 are used for scalping. You just want to, get into the market fast and get out of the market. So they are used for scalping, fast entries, and observing real-time price action. Observing real-time price action. So this time frame shows the most. Okay, this time frame they shows the most market noise and requires quick decision making. So if you are not a professional trader, you can't actually make use of all this kind of time frame, the M1, the M5, and the M15. And sorry, I didn't mention something for us. You see each candle here, each candle here. Let me zoom out. You see each candle here. Now I'm on the M1. Each candle here, it means that once I'm on the M1, each candle here took 1 minute each to complete. Each candle here, it took this one, it took this particular candle here a minute, a minute, a minute, a minute, a minute, a minute, a minute to complete. So going back like that, it took them each a minute to complete. So now if I move to the M5, if I move to the M5 here it means it took all these charts, it took each of these candles 5 minutes each to complete. On the 15 minutes, it took each 15 minutes to complete. On the 30 minutes, it took each 30 minutes to complete. It just keep going like that. On the H4, it took each candle here 4 hours. It took each candle on the H1 1 hour. So that is just what this is. It is as easy as that. So back to the M1, the M5, and the M15. They are used for scalping. And what they mean by scalping, we are still going to talk about that on the type of traders. What they mean by scalping is people that comes into the market, they act fast, like sharp, ASAP, quick decision, instant execution. Are we together? So now, and I said the lower time frame are for fast entries. Fast entries. Quick decision making. Always make sure you note down all those words. Quick decision making, fast entries. So now the the lower time frame. So coming to the intermediate time frame, they cover moderate duration, like a normal duration. And a big example of the intermediate time frame is the M30. The M30, most of the traders believe that M30, that is the 30 minutes time frame, is the intermediate time frame, and they consider H1, H4 as an higher time frame. But as far as trading is personal, M30, H1, H4, they are all in the group of the intermediate time frame. They are in the middle. They are in the middle. They are not higher time frame. They are not higher time frame. H4 is an intermediate time frame. H1 is an intermediate time frame. The M30 is an intermediate time frame. So, but for a lot of traders, and I know maybe for some people that will be watching, you feel like maybe it's the M30 that is the intermediate. No, the M30, the H1, the H4 chart, they are still under the intermediate time frame. So now they are used for identifying trade setup. And for me personally, I make use of this time frame like this. I don't make use of M30 at all in my trading. I don't check M30. I don't want to know what is happening there. The time frame I check while trading is I check the monthly, I check my weekly, I check the daily candle, I check the H4, I check the H1, and I check the M15. And for the lower time frame, the M15 is just once in a while, because it depends on the kind of trade you do. You can get confirmation from anywhere, either from the higher time frame or from the lower time frame. But we are still going to go into that. But for now, let's focus on you know getting into the market, getting to understand what this industry is all about. So now the intermediate time frame, they cover moderate duration, the M30, the H1, and the H4 chart. They are used for identifying trade setup, tracking trend development, and align with broader market structure. So you can see now that there is a broader way of viewing this market. You can see it like, okay, this is exactly what they are doing here. So now the intermediate time frame track tracking trend development and align with broader market structure, and they offer a balance between reactivity and clarity. When we're talking about lower time frame the other time, I said there are market noise. There are a lot of noise. So if you are not good enough, you can't trade on the lower time frame alone. You can't just go into the market and you are visualizing your chart from the 15 minutes and you're taking an entry from the 5 minutes without knowing what you are doing. So you have to really understand what you are doing. But at the same time, at the end of the day, trading is always personal. No matter how you trade, it is just your own personal business. So and for the higher time frame, and I said the M30s, this is the M30 chart, this is the H1, and this is the H4. This H4 is my favorite time frame. My favorite time frame. There's nothing I can do with this H4. So now coming to the higher time frame, they represent longer periods. The higher time frame represent longer periods. Now we are talking about the daily, that is the day one. We are talking about the weekly, the W1. We are talking about the monthly, the MN. And these are what they mean here. See, this is the monthly. Now it took each candle here a month each to form. Each candle here a month each to form. The W1, it took each candle here 1 week to form. It took each candle here 1 month to form. Then on the daily, it took each candle here daily, a whole day, 24 hours to form. So now they are used to determine the overall market direction. Exactly. And on this type of trading, I'll be teaching you must analyze the market from the higher time frame. It must start from the higher time frame unless you are a master of yourself. I don't know how to describe that because it's always personal anyway. But for what I know, you must always analyze the market from the higher time frame. You must start from the time frame that gives you the general view. Like, let me just hint on what I mean by general view. Like here, I can still scroll past here. So this one is not giving me a general view of this market. So now I need to go to, okay, you see here now, I can see the whole market clearly. So now I might not need to go to the monthly anymore because now I can scroll here. Everything is centered, it's centered in this chart. I can see everything from my platform. So now they are used to determine the overall market direction. Yeah, that is, they will let you know if this market is going down, is going up. At this point it came to the center here, it was this, was that. So they define key support and resistance. And what do you mean by support and resistance? Just take it like a normal thing we do. Your resistance is your ceiling, and your support is the floor. You as an human, you understand? So taking the candle as us, we human, then we take the resistance. That is, all these lines are at the top of this chart. All these lines you are seeing, all these lines are the top. At the top, they are the resistance. That is, they are preventing the market from going higher than that. You can see like here, it started from this side. It started from this side. Okay, start from this side. You can see this prevented the market from going higher. This one too prevented it from going higher. It came to this side too. It prevented the market from going higher. Then coming down again to this place, it prevented it from going higher. So that is a resistance, something that is resisting it. Like, it's not letting it to grow. Like, you are not exceeding a certain point. So that is the resistance. And for the support, these are the support. All these ones from the below, all these lines from the below, they are the support. That is the ground floor. So that is all the easiest way of knowing what a support and resistance zones means. So they guide strategic positioning. You understand? You already know the support, you know the limit, and you know the highest point of the market. So they guide strategic positioning. They provide the clearest picture of trend and market behaviors. Now we are talking about the higher time frame, the day one, the weekly, and the monthly. Now I'm telling you that the higher time frame provides the clearest picture of trend. That is, this is what they call a market trend. We have the uptrend, we have the downtrend, and we have the consolidating market, we have the ranging market, or you call it consolidation. And what it means is that for the uptrend is a market that is coming like this from the down. Okay, let me make some illustrations here. Yeah, so this is an uptrend. This line I draw now, this market is going up. You see this line is slightly going up. But now if I decide to, sorry, I don't know why this is moving up and down the screen, but this one, sorry, okay, this one is a downtrend. That is, it's coming down, it's coming downward. That one is going upward. Then when you now talk of consolidation means when the market is like this, or we don't even need to go deep into what it means like that, but it is just something like this. Let's say I have this rectangle. Are we together? We have this rectangle, and there is a market moving up and down inside of this rectangle. That is, it is touching the resistance and coming back to touch the support. Like it is of like a straight face in the market where there is a pause. That is, the market is not breaking up, it's not coming down, it's not breaking, it's not breaking up, it's not breaking down, it's just there. So that is just what that is. So now we said the high time frame provides the clearest picture of trend and market behaviors with minimal noise. That is almost like there is no noise, there's no manipulation. That is just what it means when you hear noise in the market. These are one of the terms we use in trading: market noise, manipulation. So now that is that about the divisions of time frame. Then now coming into the psychology of trading. I don't know if I should treat the psychology first, but I think we are done on this already. We're done on this already. So just check, try to like the video, share, comment, and if there's anything else you want, there are links there that we can actually work on. And as you can see, the live trade that is there now is almost at the TP, and we caught this trade at the right part, like at the right place. This is at the right place, although this is a practice account, but we caught it at the right place. We caught it at the right place. And now this account is at $22 already, and this is like on the lowest lot, and we are still aiming it at 30. This trade is just like, I think this was about 30 minutes ago. But anyway, you're free to check, you are free to share the admin. You will see the link in bio. Whatever you want to do, available for mentorship, for signals, for whatever you need regarding trading guidelines and all. So have a good day, and we'll be back to teach more on this.